You are listening to ChartingWealth.com for Thursday, the 23rd of June, 2016. We always start with IYY and our two-day chart. IYY is the iShares Dow Jones U.S. Total Market Index Fund. What do we see going on there? Well, we have a down candle starting on our two-day candle, the first day of the two-day candle for the new candle, down 0.27% in the total market. In fact, all of our charts are down, but for gold up just a little bit throughout the course of this new two-day candle. We had a prior up candle on the two-day candle for the 21st, and that was the first up candle in the prior 6 days. Actually, we had 3 two-day candles going down quite substantially. Had that little bit of an up day. Again, it did not make much of a tweak at all in our derivative oscillator. In fact, it continued to move down, as did our MACD. That's what I like so much about our charts, is they are very helpful in keeping us from getting overly concerned about moves that take place that can be out of the ordinary but shouldn't take us off the prize. So we've gone back to the downward movement. If we look at it, again, we were looking for a rollback, weren't we? Well, let's look at what happened on the 4-hour chart. We had a big up movement, a big surge on the morning of the 20th, and then the market slid sideways. We saw it crossover going up on the 21st as far as the short chart 4-hour MACD, and it peaked out on the derivative oscillator the morning of the 22nd and then started moving down again. We still don't have a crossover going down yet on the 4-hour chart. That may be a day or so away. Again, those of you who are waiting to use the 4-hour chart to find your move, there was a reversal, what we call a backup on the 21st in the morning. We're waiting to see if it crosses back over and you have the ability to jump into a down move if the market continues to go in that direction. That may be happening soon. Those of you who are using the candlesticks, the Hinken Ashi type candlesticks, well, that's a different game altogether. We've talked about that some in the past, and I want you to keep experimenting on that. What do we see going on the S&P 500 as represented by SPY? It crossed over going down on the two-day chart back on the 15th. We've continued, even with that blip on the two-day candle on the 21st, the up movement. We've seen the market resume its downward movement. The S&P 500 was down 0.16% for the day. Derivative oscillators still gaining downward momentum. And we're seeing the MACD and the signal line continuing to stay apart. They're not converging and they're moving down. So that is where we are. If we look at the 4-hour chart, what do we see? We saw the backup occur in the afternoon, on the afternoon of the 21st. And we are waiting to see if there's a crossover going down. Derivative oscillators lost a little bit of its speed. So that is where we are. Market closed a little bit, well, right on the two-day trend line for the S&P 500. Now let's go to the go from the 4-hour to the two-day chart. Take a look at the Qs. What's the Qs? That's the NASDAQ 100. What's it doing? Moved down 3 good strong candles, the 13th through the 17th, and then that up candle on the 21st. And we now have a red spinning top forming the first day of that two-day candle on the 22nd. We've crashed our two-day trend line. We don't have that anymore. And if we look at the 4-hour chart for the record, the Qs is down 0.24%, almost 0.25% for the day on Wednesday. And we see that it closed below the two-day trend line. Up movement in the morning, followed by a doji in the afternoon. Crossed over going up technically in the morning of the 22nd, and we're waiting. Now we have that back up on the Qs, waiting to see if it crosses back over going down to give you an entry point in QQQ, again, the NASDAQ 100, the technology stocks. That is where we are as far as our 3 indexes go. Now it's time to take a look at gold starting on the two-day chart. What do we see? Well, gold had quite a run up. many two-day candles going up until it started to break that, broke through the two-day trend line on the 21st, another down day on the 22nd. Again, that two-day chart on the 21st. We now have the first day of the new two-day candle on the 22nd. It is a down candle. Gold actually was up 0.05%. Again, remember, these are Hinkin Ashi average pace candlesticks. The reason we like them is they show us what the pace is. You want to learn more about Hinkin Ashi, I ask you to go to the training that you can find at our YouTube channel and, of course, at our website, chartingwealth.com. And we also have it available on iTunes. We have it all over the place. So please take that Hinkin Ashi, HEIKEN-ASHI, average pace candlesticks. Now, what do we see going on? Well, gold is broken over. The signal line and the MACD are converging. That is getting closer. The derivative oscillator on the two-day chart is losing energy. So we will see if this back movement in gold is going to actually be a trend. It'll be a trend when and if it crosses over on the two-day MACD going down. Right now it's still an uptrend. Let's take a look at the 4-hour chart. What do we see? We see the 4-hour chart, of course, broke over going down on the 20th. If we get a rollback before the two-day chart crosses on the MACD, then you might have an entry point on this 4-hour chart. Right now, a lot of strong downward movement breached the two-day trend line. Folks, that is where we ended the markets on Wednesday as we go into Thursday, the 23rd of June. We so appreciate you being with us. We love to hear from you. Please go to the website. You can email us from there. You can make comments on Facebook, Twitter, Instagram, YouTube. We love to hear from you. Also, if you want to help us out, go to iTunes, subscribe to one or both of our podcasts there. Give us a good 5-star rating. We would so appreciate it. And you want to really help us out on YouTube. This will behoove you to subscribe to our channel. Why? Once we get to 1,000 subscribers, now we have hundreds, thousands of people listen to us every week on YouTube. But once we hit the 1,000 subscribers, and we're making our way there ploddingly with your help, we'll then be able to do proprietary broadcasts. Take 2 minutes, find us at Charting Wealth on YouTube, and subscribe. When you subscribe to our channel, it really helps us. Also, giving us a 5-star rating on iTunes helps us in those metrics too. We appreciate you. We hope you appreciate us. Sign up for the newsletter at chartingwealth.com. With that, you will receive our How to Read a Stock Chart video link to that. It's only 15 minutes. It'll give you the down and dirty on what you need to start mastering these charts. Because if you can master the charts, you have a roadmap, we would argue, to prosperity. We're all about training and learning how to read these charts. No matter you're a value investor, whatever, who wants to buy too high? Who wants to catch a falling knife? Nobody. We want to buy at the right time. We want to sell at the right time. That's what being a master of the charts can help you do. Thanks so much. We love to hear from you. God bless. Let us know what we can do from chartingwealth.com.